Welcome to the Plan Solutions Incorporated podcast, where we give facts and insight on the latest happenings in the world of economics, financial markets, and personal finance. Plan Solutions provides advice on a variety of financial topics, including investment management, tax preparation and planning, and retirement planning. Chase has 25 years of experience in the financial industry, holds a certified financial planner and chartered financial analyst designations, and has earned a master's degree in taxation and a doctorate in business administration. Chase has a passion for helping clients down the path toward their financial goals. And I'm Jason LaChance. And on this episode, we're going to discuss the U.S. economy contracted in Q1, but it's complicated. U.S. stock market regains pre-tariff levels. We're also going to take a look at the Franchise Tax Board information and document request, as well as a look at the Plan Solutions Incorporated Office Bulletin Board. Mr. Armour, how are you, good sir, as we roll towards summer?
That's right. Yeah, weather's been nice. Tax season's over, so yeah, it's been good.
Good to hear it. Good to hear. Plenty. Hopefully, get some time to hit the links and enjoy some family time, huh?
Yeah, busy family time with the end of the school year and all of that. So hopefully, once we get fully into summer, schedule will settle down a little bit.
Yes, sir. All right. Well, let's dive right in. The U.S. economy contracted in Q1. But it's complicated. The most recent economic growth report from the Bureau of Economic Analysis shows that the U.S. economy shrank by 0.3% annualized rate in the first quarter of 2025. It is the first decline since the first half of 2022, but that headline in the opening, I mean, it kind of paints the picture. We're in an interesting situation.
Yeah. There's a lot of the data you really have to dig into it to get the full picture and be able to properly interpret it, right? With so much change and adjustment going on in the economy, and that's exactly what we're seeing here. I think the headline number is what caught people's attention, that the economy contracted. Oh no, does that mean we're heading into a recession? But when you dig in, I mean, there's a couple big areas or big subcategories that really had a big impact. And the biggest one, not surprisingly, is trade, right? I mean, that's where all the focus has been on with tariffs and everything. And the way we account for trade in the economic output is exports are a positive and imports are a negative. So the idea is, exports are things that you produced here and sold abroad. So in terms of your domestic economy, that represents growth. If the items were, manufactured outside, but then, brought in here, that's a negative. That's the value of those imports are subtracted. And what we saw is exports held pretty steady, but imports increased 41.3%. So huge increase. And, pretty obviously that's businesses just trying to front run the tariffs, right? They're trying to import as much as they possibly could. Not just in terms of shipments, but a lot of people don't realize there's these different custom houses where if shipments come in, they can be stored there. The business does not have to pay the tariff until they leave that warehouse. Right. So a lot of businesses may have had goods sitting in there waiting until they had a purchase order and they knew they were going to be able to sell it through to a final customer before they committed to paying the tariffs. But I think with the prospect for the tariffs going up, a lot of that was being withdrawn as well. So if we look at the big picture, that big increase in the trade deficit, it reduced U.S. economic growth by 342 billion. Which is 1.15%. So out of that 0.3% negative, 1.15% of it was just the imports of import-export trade gap of goods and services. But of course, that's expected, that it'll reverse in coming quarters, right? As businesses have already built tariffs or already built inventories to try and front run the tariffs. And probably what they'll be doing is drawing down on those inventories, and so we won't see as big of an import number going forward.
Yeah. To let people know, how do we measure growth or contraction in the U.S. economy?
Well, what they're looking at is real economic growth. So what real means is subtracting inflation
Hmm.
first, right? Because obviously, if you're measuring the total dollar value of the economy, the nominal will include the price increases, but the real is designed to subtract out those price increases. So that's the first thing is the economy may be growing in nominal terms, right, as we would measure it in dollars. But the effect of inflation may be enough to then cause the real growth to be negative. And it's basically a huge data gathering operation in many different areas of the economy to create this number, which for the most part is not perfect when you're trying to calculate the size of an economy, the size of the U.S. There's a lot of things you can point to that aren't perfect in the methodology, but it's the best data that we have. And of course, I should also stress the number we're talking about here was the first release. There's typically 3 releases in subsequent months where additional data comes in and that number is revised.
Okay. Thank you for the clarification on that. I just wanted to have a guise of how we measure growth and contraction. So, what's another area of interest that we need to look at as far as that 0.3% decrease?
Yeah, so another area that's been in the news is we saw a 1.4% decrease in total government spending. So that's federal, state, and local governments. Pretty rare that that happens, but we did see a pullback. Now, interestingly, it was largely due to a 5.1% decrease in federal government spending, the bulk of which was defense spending.
Hmm.
So clearly, we're not spending as much on defense and potentially not shipping as many of those weapons overseas to allies. But there also was in non-defense spending, which is basically everything else in the federal government, that did decrease by 1% as well. So we did see really a decrease across the board in terms of federal government spending, the bulk being on defense, but pretty broadly. Whereas state and local governments, we saw kind of the normal increase in spending that you see from quarter to quarter.
Are there any bright sides, any factors to this that we actually did see an increase?
Yeah, well, this was another big number. We saw gross private domestic investment increase 21.9%. So that's
Wow.
basically, money being invested in long-term assets, which was a big increase. But again, this might be a sign that it looks like businesses were attempting to front run the tariffs, not just to, fill the shelves and warehouses with inventory to sell, but also ordering business equipment.
Hmm.
So, if they're worried about tariffs on equipment that they may need to do their business, not necessarily something that's for retail, but that they will keep as a part of the business investment, they may have placed those orders ahead of time to get in front of the tariffs. So a good chance that, that really positive number that we saw will probably normalize in the coming quarters.
Yeah, what about U.S. Domestic economic growth? We always talk about personal consumption expenditures and so on.
Right. It's kind of ironic, right? That's usually the big number that we look at because it's like 65 to 70% of the economy. So it has the biggest impact. But we're in such a weird situation here that all the other categories are actually the more interesting ones, just because they're moving so much. There's so much adjustment there, and they do tend to be more volatile in any given year. But no review of the U.S. economy is complete without looking at personal consumption expenditures, basically household spending, which is the big piece. And we saw that it still increased 1.8%. So that's a little bit of a slowdown from prior quarters, but it's still positive and it's still the biggest component of the economy. It seemed like spending was pretty stable except for durable goods. So that's typically those, more expensive, long-lived type items like a car or appliances or things like that. What they sometimes call the big ticket items. Whereas just the day-to-day spending looked to be pretty stable.
Hmm. Hey, do you think it's just due to economic uncertainty or a lot of the questions around what was going to happen with tariffs that people were just holding on to their cash, or do you think it's also a situation of interest rates? I mean, the vast majority of us were going out to buy a car. We're probably uh, getting a loan of some sort.
Yeah, it could be interest rates. It could just be economic uncertainty, right? People may be more worried about their jobs. This GDP report was really one we were keying on because it was the first time we were going to get hard data, real statistics on what's happening in the economy. And unfortunately, as we've talked about, it was pretty mixed. It didn't give us a great direction on where things are going. It's kind of has a lot of uncertainty within the report itself. But what we have been getting is a lot of what we'd call the soft data. So that's more survey-based data in terms of how people are feeling about things. And the soft data has been really poor. Consumer confidence really dropped. Inflation expectations have gone up a lot. So I think partly the decrease in consumer spending on those big ticket items probably just reflects how they're feeling about the economy. Now, whether, those feelings reflect reality will take some time to see. We've seen plenty of times like, post the initial, drop off in COVID, survey data stayed very low for a long time while the hard data on the economy started improving pretty quickly. So they were kind of going in different directions. So will this be one of those periods, or will one or the other end up being more indicative of what we're likely to see down the road?
Yeah, and how is the does this data reflect maybe what the next move that the Federal Reserve is going to do? Either increase, decrease, or leave interest rates as is?
Yeah, the Fed also, I think, is in a tough position in terms of figuring out the direction things are going, right? I mean, the headline number, weaker economic growth, normally you'd think that would mean the Fed would be more likely to cut interest rates. But again, when we dig into the subcategories, it's not real definitive. Meanwhile, you've got the personal consumption expenditure index, which is really the Fed's preferred inflation gauge, right? We tend to look at the consumer price index, tends to be more common in other realms of the economy, but the Fed likes the PCE. And the PCE increased 3.6% in the quarter, which was up from 2.5%. So, potentially signaling a pretty good increase in inflation, and now well above the Fed's 2% target. Of course, the challenge there is since this economic growth report came out, we did get the consumer price index and it came down, and inflation actually looked like it was trending downward. So there's just so many moving pieces, and with the way different indices are calculated, right? We're in a period where in a lot of cases you're getting conflicting information from different indices.
So we are in an interesting quandary as we move forward economically. But we'll just have to wait and continue to see. Of course, we've seen some of the news stuff that I think a lot of people found interesting. Obviously, President Trump meeting with Xi Jinping. It seems there's something being worked out with China, what that's going to mean. So, uh, it, uh, yeah, we just have to kind of wait and see, I guess, huh?
Yeah, I mean, as we go through the data, there's no real clear direction or trend or obvious idea of which way things are going to go. As we've met with a number of the big investment firms, talking about their philosophy, what they're seeing, hearing a lot of the same. I mean, everyone just has to admit we just don't know. A lot of it's all going to be based on the direction of government policy, which at this point, as you said, we saw some real negatives in early April. Saw that maybe there was some willingness to compromise or make some deals recently, which the market appreciated. But there's still a long ways to go and a lot of unanswered questions out there.
Yes, sir. Well, let's jump on over to U.S. stock market regains pre-tariff levels. Investors clearly did not like the tariffs that were announced on April 2nd. The U.S. stock market declined over 12% in a few days following the announcement and escalation in the tariff rates with China, but things have shifted around.
Yeah, I think investors expected there would be some action on tariffs. I mean, obviously, it was a big topic during the campaign. I think what surprised investors on April 2nd was just how large and broad, right? That and how quickly it was being implemented. And so the U.S. stock market basically started pricing in a much higher probability of a recession. I mean, it declined 12% in just a few days as people had to, I think, rethink their views. And then when you had the escalation in tariff rates with China, it really extended that market decline because to a large extent it was basically becoming a ban on Chinese imports, right? With tariffs being so high. But since then, we've seen some resilience or maybe some optimism about that path forward. Since the April lows, the U.S. stock market has rebounded about 16.5%, and actually now is above where it was on April 2nd when those tariff announcements were made. When we put the newsletter together, the market was still down about 1% for the year, down about 6% from its high in February. But it's actually recaptured where it's basically even for the year now. So, at least we kind of maybe got a relief rally or something to, bring things back to equilibrium more in line with where outlook was at the beginning of the year. But yeah, still a lot of uncertainty and a lot of market volatility. Fortunately, at least lately, the volatility is not all to the downside. Some of it has been to the upside as well.
Yeah. So we can't necessarily state that this is a large upward trend. It's just kind of more of a reset, maybe.
Yeah, I think that's what it is. I mean, there's still, we've got two kind of quasi outlines of a trade deal with the UK and China.
Mhm.
Europe's talking about they're not going to be so easy to deal with in terms of leaving some of those tariff increases. And it's really too soon to know if the deals that are being negotiated, if it'll benefit the US, if it'll benefit our trading partners, if it'll create more of a win-win. I think investors are positive about the fact that trade negotiations are at least ongoing and there's a willingness to make a deal instead of have this prolonged uncertainty. And that's what the market really worries the most about is, uncertainty and big changes that could surprise and force investors to change their thesis. But yeah, still obviously a lot of uncertainty. So I think potentially the volatility may continue. But now we're in this interesting situation where we don't know if it's going to be good news or bad news, if it's going to be upside volatility or downside volatility going forward, or maybe a combination of both.
Yeah. Anything else you want to add before we move to franchise tax board information and document request?
Well, just, this is something that we're continuing to keep a close eye on, right? As things change. I mean, it's constantly assessing the new data that's becoming available and changes in policy that we may see and what those implications could be.
Yes, sir. All right. Franchise tax board information and document requests. Tax-related identity theft has become an increasingly large problem for the IRS and state agencies. We touch on this all the time about, protecting your data. So, what are we seeing as far as these scams? And when we talk to franchise tax board, for those that may not live in California, that's the state of California tax agency.
Yeah, and it's really across the board. We've seen it with the IRS, we've seen it with other states. It's just the franchise tax board has been very active lately, right? So we've been getting a lot of questions about it and trying to kind of get out in front of those questions. Basically there's just a big problem with people filing fraudulent tax returns, claiming someone else's tax refund, or in some cases altering the tax information to create a fraudulent refund that then the scammer is attempting to collect. And so the IRS and other state agencies have created different programs to try and review those returns and catch them for signs of a fraudulent return, so they can, act to hopefully not issue the refund or recover the refund. And so one of the things we've seen is coming out of this tax season with a lot of state of California tax returns that were filed, instead of people getting their refund, they're getting notices from the franchise tax board. Basically, they call it an information and document request, where they're looking for some tax related identity information of the person that filed the tax return. They basically want you to prove who you say you are and that you did in fact file that tax return. And then if you send in that information, then they'll go ahead and process the refund.
So it's really just a extra added layer of security. This isn't a situation where it means you're getting an audit or being told to revise.
Exactly. Yeah. It's not making changes to the tax return or challenging any part of the tax return. I think a lot of people, when you get those notices, right, your heart kind of sinks. I know I got one from the IRS the other day at home, and I looked at it, and I wasn't worried, but I thought, oh, it's just going to be more work, right? After a long day, I got more work to do. Fortunately, they were letting me know that they were sending me an $8 refund. I don't know how they came up with that, but I was very relieved that I didn't have to do anything. And I didn't have to fight them on anything. And with this isn't one of those where, you're then going to have to go in and, prove things on the tax return or fight over certain aspects of the tax return. It's really just need to provide them with the necessary documentation so that your return can go ahead and be processed. And it's usually a pretty simple, smooth process.
Yeah. Oh, that's funny. I just picture you just, all right, I'll go buy myself a really good cup of coffee here. Thank you, government of the United States. Anything else we want to talk about concerning franchise tax board information and document request?
Well, as always, if any of our clients get these notices, if they're not sure what they mean, by all means, send us a copy. We'll be happy to help out dealing with it. If we prepared the tax return, we probably have the information they're requesting, so we could put that together to, just make sure that we kind of streamline the process of getting responding to those notices and getting everything cleared up.
Yes, sir. All right. Well, let's take a look at the Plan Solutions Incorporated office bulletin board. We've got one item pinned up there. What is it, Mr. Armour?
Yeah, so Charles Schwab, which is one of the largest custodians for holding investment assets, one that we use quite extensively. They just sent out a kind of a new twist on what they call a smishing, fraud threat, where someone uses text messages to send out a notice, right? And they're trying to get people to respond to a link in that text message. And so in this case, right, I think they're trying to capitalize on the market volatility and the investor emotions. And so there's a lot of these fraudulent texts going out, basically telling clients they need to verify a transaction, right? And they give them a link, and it says, if you click on this link, and then of course it takes you to a fake, Schwab login page where you're prompted to enter your login credentials. Excuse me. And when you do that, by going to that fake link, you're basically sending your login credentials, your login and your password for what you think is the Schwab Alliance platform. But once they get your information, they can now go to the real Schwab Alliance platform and log in and potentially be able to access your account, transfer money out, and make changes. So it's really important. One, if you get a text, don't click on those links. Go to the trusted website that is correct. Two, it's great to have things like two-factor identification, two-factor verification to create some additional protection. And three, if you're just not sure, just call our office, right? And we can go through and we can discuss, is there anything actually going on here, or is this just entirely fraudulent?
Yeah. Yeah. Well, it's unfortunate that it happens, but it does happen. So it's good that we all be vigilant about that and have safety measures in place. Anything else you want to add before we wrap up this edition of the Plan Solutions Incorporated podcast?
Yeah, just sticking on the risks of fraud and things there. I think anytime you get an email or something that kind of worries you and you realize it's creating this emotional reaction, right? That's what it's designed for. You should immediately be skeptical. And if anything, take a minute, right? Calm down. Don't, get worked up, and then think, okay, what's the best way to really verify this through a separate means? Because it probably isn't accurate, right? But it's that emotional reaction that they're trying to target, because that emotional side of the brain will cause the objective side of your brain to maybe shut off for a minute there. And sometimes that's all it takes, right, for us to make a mistake so that somebody gets important financial or identity information. So, just being able to recognize that or know that that's what they're trying to create, and take a step back and say, okay, kind of using the objective side of my brain, what's the best strategy here.
Yes, sir. Well, we thank you all for listening to the Plan Solutions Incorporated podcast, either on Apple Podcasts, Spotify, or wherever you get podcasts. Please hit subscribe if it's your first time listening, or you can go to our YouTube channel if you'd like to follow along to a visual form of the personal financial review while we have our discussion here on the podcast. It's youtube.com/@plansolutions, and you can get subscribed there as well. And if you want to get the written form of all the content we discuss, as I mentioned, the personal financial review, send Katie an email and get subscribed today. It's KATIE@plansolutions.com.
The views and opinions expressed in this podcast should not be construed as an offer to buy or sell any securities. The information may not be current, and Plan Solutions has no obligation to provide an updates or changes. Plan Solutions does not make any representation or warranty as to the accuracy or completeness of the statements or any information contained in this podcast or any liability therefor, including in respect of direct, indirect, or consequential loss or damage, is expressly disclaimed. Plan Solutions is not providing any financial, economic, legal, accounting, or tax advice in this podcast. In addition, the receipt of this podcast by any listener is not to be taken as constituting the giving of investment advice by any Plan Solutions associate or individual to that listener, nor to constitute such person a client of Plan Solutions. Any reference to a specific company or security does not constitute a recommendation to buy, sell, hold, or directly invest in the company or its securities. Market indexes are unmanaged and cannot be invested in directly. All price references and market forecasts correspond to the date of this podcast.
Plan Solutions is a registered investment advisory firm.